Hello, investors and traders. Nothing has changed in our hypothesis for the last 1 year and 8 months, and that is buy on the pullbacks. We will specifically go over 3 factors that will tell you exactly when to get into this market. But just for the starters, we have been buying today. We will not always be bullish, as next year we see the best way to make money is to go short. But for this year and the remaining 4 months left in the year, the way to make money is to go long this market. Let's start off with the beginning. This has always been a difficult month, the month of August. It has always statistically been a down month, and I would say the worst month. It is also a very difficult month to trade or invest in this market because of the fact that if you are a large hedge fund manager, investment banker, analyst, or have made money during the year, usually the whole month of August, you are off with your family. Thus saying that, we are also at our vacation house. That's why you see a different background behind us. But thus saying that, it's still good to read what's going on inside of this market and to prepare us for the future. I'm specifically looking at a few factors that will help me make my buying decision in this market. I want to reiterate, I am not selling you anything. I don't want you to buy anything. I don't even make money off the advertisements yet. I am doing this more as a teaching process to myself. Thus saying that, I am close to 25 away from the 1,000 subscriber mark, and I would love for you to subscribe to this channel if it brings you value. Let's start off by reviewing the election year. If we look at the stock market in a 4-year period, thus being after the election, a bad year, the second year, a very poor year, the third year followed a very good year, which was last year, and then the fourth year, the election year, an okay year, usually averaging about 10% and very selectively that 10%. I feel this pattern has carried out perfectly for the last 4 years, and I expect this same pattern to close out this year the same way. Historically, U.S. markets have generally risen in election years. Since 1950, U.S. stocks have averaged returns of 9.1% in election years. In our bold statement videos, we have also said close to 7 months ago that they would replace Biden. That prediction has aged well. What is the problem now with this market? It's the uncertainty. The uncertainty of who will win, Trump or Kamala. This is not a political channel where I give my views of who is better or who I like better. This is how to make money inside the stock market. And with this uncertainty of we do not know who's going to win, it affects the market. Trump versus Biden, we had a good indication Trump was going to win. Trump versus Kamala, there's still amount of uncertainty in the market. This would be one factor when this starts revealing itself. Who will win? This will be one factor that propels the stock market up higher. And for me, it doesn't make a difference if it's Trump or Kamala. But when there's a clear certainty that one of them will win, this will help the stock market. For the past 15 years, my sole focus has been studying historical, analytical, and technical analysis in the market. I've observed that breakouts often occur in clusters. In my journey, I've come to understand the opinions don't hold much weight. It's the clues the market and the securities offer that truly matter. Today, we will dissect clues to tell you that this market is going up higher. In the same video of us declaring that Biden would be replaced, we also came up with another statement saying typically in bull market, our experience is that there are 5% pullbacks annually, and then there is a larger correction between 10 to 15%. And we are seeing that in the S&P 500 and the QQQs, a 15% pullback and more. This is something to be happy about because further on down the line, we're going to explain you why we're coming close to a short-term and intermediate-term bottom in this market. There's also uncertainty in the wars going around the world, and this will also play into the hypothesis. And when it comes clearer that there is a clear direction of what's happening between all the wars going on, the stock market will go up. Any killing of children, women, and non-soldiers, of course, that is horrible. Of course, any type of terrorist act or even any children or hospitals being bombed, that is horrible. But we are here for the stock market today. And what we're trying to figure out when the uncertainty will stop. I am calling this video not just yet, as many people are calling that we are in recession, that we will go lower. This is the start of the bear market. I am looking at it and saying, not just yet. Disclaimer, the information provided on our channel is for educational and informational purposes only. It is not intended to be a substitute for professional financial advice. The first thing that I am looking down is a top-down approach, looking at the big picture. My trading edge is my indicators. I'm trying to achieve high probability investing, and this is using the indicators. Thus saying that, I believe that this is a high probability chance that we will be higher by December 31st than what we are right now. This 15% pullback is a gift to me. I am not listening to the news, the rhetoric. I am following analytics and the bigger picture. I have a rule-based system that I use empirically, theoretically, and psychologically. And what I'm trying to do is build a weight of evidence in a three-part process that starts with the overall market, broken down into the sectors, broken down into the individual securities. Based on today's result, short term, I am bullish, intermediate term, I am bullish, and long term, I am bullish. I reiterate, I will not always be bullish. Sometimes I will be bearish. And I know your feelings right now feel that we are in the start of a bear market. I do not feel that way. My approach is data-driven approach to maximize success. I'm trying to increase the probability of succeeding. The first thing I want to look at is where we are in stage analysis. And we are in a pretty bad state for the Nasdaq 100, where 78% are in a declining phase, where in the S&P 500 securities, before today's disaster, we're about 50-50. Thus saying that since the year 2023 in January 18, it has always been the same, buy on the pullbacks. And even though we broke down over here, we still said buy on the pullbacks. And we went up higher. And then we bought again on the pullbacks. And every time it dipped, we bought on the pullbacks. Most of the dips were 5 to 7%. Some of the dips in that time were 10 to 15%. Just on our long-term position, as of today, with all this disaster, we are still up 50% on the QQQs. Not only our recommendations on the video is not inside, of course, that 50%, or the many Magnificent 7 companies we've been telling you to buy on pullbacks. But as you know, since the last 2 months, we told you we will have a pullback. And we predicted the pullback would be somewhere between 420 and 440. Nothing has changed for us. But something has changed in the fear index. There's huge amounts of fear inside this market. If you look at the market volatility on a 50-day moving average, we are at extreme fear right now. And we have not seen this fear in the last 6 months at these levels. If you look at the contract itself, and this is yesterday's number, we will reach extreme highs on the VIX. In fact, to tell you, this morning, I bought options for puts on the VIX. The VIX is a fear factor. And this is the first indicator that I want to show you, that I want to tell you that this market is going higher, because we are seeing extreme levels of fear. When there is extreme levels of fear out there, I get more happier. I close out all emotions that I feel from hearing the horrible news that's going on, or the uncertainty right now in who's going to win United States presidential election. Once those two factors come more to a certainty, this market will go higher. Even though these are yesterday's numbers, the short-term indicator after today will be closer to bullish, where this number will be closer to a zero number, thus triggering our short-term indication. We go further. Usually with our CCI indicator, when this number hits under 200, which it will by the end of the day, we will go higher and at least test the zero number, if not break the zero number and go to 200. This is again putting the probabilities on our side. If we know that we are at extreme fear and we know when the CCI indicators falls to a certain level, we will bounce and get some type of rally in this market. We go further. If you look at the short-term, medium-term, and long-term indicators, after the close of today, August 5th, it will be bullish. If you look at the components, we are somewhat at a neutral level. But I want to go to two factors to continue. One is the RIDEX ratio. Every time that this number hits minus 500, we rally, and we will rally up to around at least the 200 level. Combined with the VIX, and let's combine it with also the put-call option ratio, which is at extreme fear, thus bringing a weight of evidence that it is not a bad idea to start buying into this market because of the election year, because of the VIX, the RIDEX ratio, the put call options, and soon there will be a certain certainty in this market with political and geopolitical events. I challenge you to build your own system, your own indicators, and to lose the emotion of what the television and what you're feeling. Those will misguide you into the wrong direction. This is my decision, nobody else's decision. I have further taken a position in the VIX in the morning of August 5th to short into the VIX, which counteracts the market. I will soon, in the coming days, be buying into positions. Thus saying that, you know the catchphrase, study it, analyze it, adapt it. Peace.